And we should be good. Video check in. All right. Good to see everybody. Happy Friday, everybody. All right. So let's jump into it. Got a great question to kick off the morning. And I also wanted to share this with you right here. This is something I posted on my Instagram just yesterday. And it's a quote from Howard Marks. If you haven't read Mastering the Market Cycle, really good book. It's especially for those of you that have a slightly longer, I won't say investing approach, but if you're a fan of macroeconomic study, that type of focus in your longer term portfolio, your investments, you'll definitely enjoy Howard Marks. He's written 2 books. Like I said, Mastering the Market Cycle is a really good one. And to be a disciplined investor, I think the trader applies too, you have to be willing to stand by and watch other people make money on things that you passed on. Very, very wise words indeed. All right, so let's get into it. First question there. Let's see. Hey there, Maruf. Good morning. Good morning. For choppy market, is agro moderate or conservative? Which would be better? So if you have a specific market in mind, I'll be happy to dive into that particular symbol. But if you have a choppy market, my take on that would be, why would we focus on chop, right? We are not in a choppy market on the indices. So for anybody thinking that what we've seen over the past 3-4 days is somehow telling us that the markets have stopped moving higher or this is a significant correction, please remember, we have not even taken out last week's lows. We haven't seen lows like this since, so let's keep that in mind. I think the market tends to be very momentum trader weighted, so that if a market stops making continual higher highs, there's a certain amount of panic that ensues. Please don't abandon looking for those uptrends. There are still plenty of them. So my advice, and thank you for the question, it's a terrific question. And that is, in a choppy market, which is going to be better? None of them, because I don't ever want you guys prioritizing directional trades in choppy markets. Now, if you're focusing on, for example, collecting premium, if you want to collect credit, if your focus is on iron condors and just any kind of option strategy that would prioritize a collection of credit, that's where you want to be focused on sideways markets, specifically for those types of strategies. So hope that helps. And thank you so much for the question. All right, moving on. Good morning, everybody. Great to see you guys. They really, thank you. Tamek, yeah, I think it's a really tough thing for traders to accept that every move is not going to be for them. So if some traders saw some weakness the last few days and thought, I wasn't in on that short, well, then maybe that momentum was what was setting up the buy, for the next round of entries for your account, right? So thank you very much. I appreciate that. Can we take a look at JMIA? Sure. All right, here we go. It's hard not to like this name structurally. I don't have a narrative behind this, although this might be, is this a CML Viz pick, Vish? It sounds very familiar. And yes, the move lower into this area here, I would be very interested in. Now, the thing to remember about where we are on GMIA is we have earnings just staring us right in the face. So be aware of that. Perhaps an entry after earnings would be better timed. You might get a lower low, or you may not, right? The flip side of this, the market might break out and leave you in the dust. So you've got to think about what's the expected move. What would that mean to your position based on where you buy it? But also remember, the overall trend is up. And even when earnings might break a trend or at least shake it up a little bit, I don't feel that earnings are usually the kind of needle mover where it has the ability to take a bullish market and turn it bearish, that it has the ability to take a nice uptrend like the one we're seeing in MIA and turn it into a downtrend. I don't believe that V tops and V bottoms are actually a natural state of the market. What usually creates V tops and V bottoms? Geopolitical events, massive negative implications for a company. And even those don't necessarily create V bottoms and V tops. And of course, the Federal Reserve. But other than that, It might create volatility. It might create a temporarily oversold situation, but I would definitely be open to buys. Let me give you an example rather than talk so theoretically, because I was just talking about this market this morning, and this is a long position that we've been monitoring for months. It's a long position that, well, in this case, from our sector secrets mastery, took the scenic route to moving back higher. And you can see here before earnings, boom, there's the volatility on earnings, but then look what it did after. This is Freeport-McMoRan, which moves in tandem really with copper. And copper moves in many ways with the strength we're seeing in equities. So even though earnings shook things up, look at what happened after earnings. Because it had a good trend before earnings, and it continued higher. So if you want a little bit more detail on copper, Freeport-McMoRan, and why I stuck with the long position here, it's not out yet. It's not out yet, but it will be, I believe, next week. And that's going to be the next issue, or at least one of the issues next week of Countdown Traders. So if you haven't signed up for that yet, go check that out, sign up. And then the conversation about why this was an uptrend, how we were able to sit through this, copper equities, you'll really dig that. But that's what I'm talking about, JMIA, that we might see that kind of volatility. So thank you for the question. Hey there, Jason, morning. Do I ever average down on a position as it sinks into the wave? So I know it's going to sound like I'm splitting hairs, and I know it's just semantics, but so averaging down, and I know exactly what you mean. So all I'm going to do is just tighten that up for my own head, which is I always have a zone, right? And I love the idea where you're thinking, hey, is there a deeper buyable zone that we can buy? And is there, you said, do I ever average? Is there a position you were thinking about specifically, Jason? Because if you guys have a question as it pertains to a specific symbol, let me know, because I want to give you as tactical an idea or a setup as possible. So let's just talk about, for example, the NAS. All right. And so if the NAS were to sink lower and lower into the zone, gang, my zone of what is a buyable level in the NAS, this is the NAS futures, extends all the way down to 13,150 easily 13,150, and maybe even some of the volume in the 55 EMA closer to 13,000 even. So that doesn't mean that I want to be buying throughout this entire 600 point chasm, but it does mean that as long as I can control my risk, as long as I know the distance between my entry and my stop is an allowable amount of unrealized loss, that entire zone is technically buyable. So the simple answer is yes. The more specific answer is what levels within that zone specifically would be spots at which you would place a limit order to buy. I don't use market orders. Market orders are the orders of panic and no planning. We don't want to go there. You want to have a plan well out ahead of time to say, you know what, I'll either place an alert or I'll place a limit order to buy as the market comes down to these predetermined levels of entry. So I hope that helps. And thank you for the question. Absolutely. All right, let's see. Oh, here we go. Let's see. Tomek, I was thinking the market will be lagging today with monthly expiry. Right, we have options expiration today. Stayed in cash for the next week. I'm happy to see people making money. Yeah, JOMO is definitely on the other side of that coin where FOMO resides, and FOMO is never the way we want to ever trade the markets. Joy of missing out. For me, I love it, my friend. Joy of missing out means, hey, you guys have fun in the chop. You guys that are shorting the pullback, terrific, because I'm rooting for you. I have a saying that sometimes the most bullish thing you can be is a near-term bear. In other words, I don't root against the bears if I'm a bull. In fact, it's the bears that create the pullbacks that I get to buy. So, hey, I hope they're making money in the way down. They deliver a nice pullback entry where, kind of talking about those aforementioned limit orders, hits that limit order, and then I can take the ride back up. That's buying the dip. The dip is heavily reliant on those bears. And I'm happy to miss out on that short move. I'm happy to root for them if they move the market lower, and then I'll scoop up buys once that happens. So yeah, I love that. Thank you. All right. Okay, that was on CML Biz. Okay. And they're the Amazon of Africa. Oh, okay. Interesting. I don't know anything about that, but I'm going to write it down. I don't know much about it other than I've seen some chatter on Twitter. And I remember seeing it on the CML Viz. Yeah. So, okay. Good to know. A CRM. Sure. All right. Just started moving back into an uptrend. So Salesforce just got the clarity of lit up 13 exponential, lit up 21 exponential, and double green. So we just got the double green bullish 2 dots there. So it's a very fresh uptrend, but it's buyable all the same. So I would need a pullback. I don't know a pullback to the 10-day rolling VWAP is enough for me. It's better than nothing, clearly. I would, if I could be a little choosier, I'd say something closer to 240 and a half. And remember, the prices that I'm putting out there, gang, those are the triggers. Those are alerts that I will place in the market. And what that means is whether the idea is to leg into a call vertical, get long the call, a put credit spread, what have you, regardless of what the idea behind the trade there is, you need a trigger. I think a lot of traders omit a trigger from their options trading. I like buying underlying stock. What do I need for that? A trigger. I love buying futures contracts. What do I need? A trigger. And so options don't get a pass on that requirement for a certain momentum and trigger price to be reached. So with that being said, I'd like to see something closer to that 10-day rolling VWAP at a minimum. 13 exponentials valid, 21 exponentials valid. The VWAP for the month of February is valid. And of course, the wave itself is also. So if I get a deeper pullback, I'm game. We did touch that 10-day rolling. So again, we talked about earlier as it sinks down into the range. If you take an aggro entry, aggressive entry, think about the position size you're willing to take at that level. It should be relatively small to moderate or conservative levels that you might be open to if and when the market continues to sink. So awesome with fresh uptrend on CRM. Of course, heavily weighted now in the Dow. The other question was OKTA. Sure. All right. So OKTA. Well, now this is a whole other conversation, right? OKTA is a conversation of a much more established uptrend. That's number one. Pull back into the, it did touch the wave, didn't it? It actually did touch right in here. So yeah, I like the idea of a pullback buy. Again, the only sort of hesitation I have is earnings are right away. I would like there to be about a 2-week span before earnings if I'm going to take advantage of a rally into earnings. And I like to have a pretty good narrative on what the whisper numbers are, if the company did give guidance, and what the chasm between the whisper numbers, the guidance, and Wall Street expectations are, because that is going to tell us what type of sentiment is already being discounted pre-earnings into the stock. So that's a different conversation. But again, I'm looking at the difference of opinion between the whisper numbers, Wall Street, company guidance. And that's what's going to determine how much bullishness I think is already factored in and how much more we could see before earnings. So about 2 weeks. So what would that mean? Well, today's the 19th. You could see this is inside that 2 weeks. Really, if I'm focusing on a window where I'm outside that 2 weeks, I really shouldn't see anything closer than, say, the 5th or the 8th for earnings. At least I've got a 2-week span of time in which I can get the trade to trigger, follow through, and allow me to exit before earnings, because I do want to be flat before earnings. So thank you for the question, Naveen. Can we look at the structure on LAZR on the daily? You bet, of course. So LAZR. Oh, by the way, we're doing a little bit of, what do I have here today? Oh, this is Jamaican Blue Mountain Peaberry. Really good, really smooth. This is my first, like I said, these are giant mugs. This is my first mug. I'm going to probably have a second one here in a little bit. I'm going to debut a new mug next week. Got a new Snoopy mug yesterday. So we'll have a new mug for Charts and Coffee next week. All right, LAZR. This is interesting because I don't want to short it. I don't want to short this. Look how it's sitting in this pretty heavy duty level of volume. as it's testing the point of control on the volume, that's where the most volume has occurred in LAZR, sitting in the wave, kind of shallow, but also sort of compressing. In this situation, I would probably additionally tell you, I don't drop trend lines. What I'll do is I'll drop a high-low VWAP, high, swing low VWAP, and see how the VWAPs converge in on LAZR. Now, with that being said, if I can get a momentum break out of this, or because I think the market's going to continue heading higher, how did we get here? What's the most dominant psychology? It's bullish since December. What I would say is focus on a pullback deeper into the wave or on a pullback that's hugging the lower VWAP. And where could you anchor the VWAP here? I say you could anchor the VWAP the 15th of December, right? You can anchor the VWAP the 15th of December. That would not be a bad level at all. Or you can just use the wave and specifically the 34 EMA on the close. All right. So I hope that helps. All right. Moving on then to the next question is, let's see. Hang on, gang. AMZN. Choppy for me, I really haven't. I will tell you straight up, Nugget, I look at this and this is a good place to collect premium, not a good place for directional trades. But I don't want to bet against this because XLC, the ETF that Amazon is heavily weighted within, is just been on an absolute rocket ship higher. With that being said, the structure here is not one that I can do much with. It just isn't. I know it's trying to head higher again, but I'm sure there are setups for other folks or what you could do. And a lot of folks have been asking me about, Rag, what do you do if the daily is not really that interesting, but there might be something brewing? What can you do if you're not going to day trade it? There are some interesting things you can do in a 1 hour chart, right? And so a 1 hour chart is sometimes just a longer short-term time frame that I'm willing to day trade, maybe keep overnight if I have structure on the 60-minute time frame. And on a 60-minute, one of my favorite things to do is that high-low VWAP. Look at where they're converging and how the market might break out from some sort of consolidation. I actually don't find trend following on a 1 hour chart to be a high probability setup, but I do know that VWAP breakouts are very, very powerful if the right environment presents itself. I don't see it on Amazon. So this is less about, hey, this is how I want to trade Amazon. It's more about what would I be looking for? And I don't have it right now, but thank you for the question. Thank you. Let's see. Next question is, do I alert? Hey there, Bish. Do I alert out before closing a position after T1? So in my futures trading, in the simpler futures room, and in my options and ETF and stock trading in the sector secrets mastery room, when I send out an alert, Bish, you've got all of that, right? You know what the entry zones are, usually 3 of them. You know which one is affordable for you because you can crunch the numbers at the moment of those levels being hit. And you know what the target is. So you have that well in advance of everything. And that's the way I like to alert things to everybody. Not, hey, I just got in or I just got out. That's not an alert to me. That's not going to help you get the best price on your entries, get the best exit. It's an after the fact notification. To me, that's not an alert at all. But because you have it in the original setup alert, what I recommend everybody do is put alerts on your platform. You can do it on TradingView. You can do it on Toss. You can put these alerts on your platform. So you are proactively at the wheel and your platform's going to say, hey, that target that you wanted to scale out of, it's here. Right. And then because you're aware of it, as I'm going to be aware of it, because I'm doing the same thing, you're not sitting there after the fact, hopefully getting the fill that I got, or hopefully the market didn't move away quickly, those kind of things. So I don't want that to happen to you guys. And I want you guys much more empowered than just sort of following me after the fact. I know when I was learning, my mentors did that for me. They gave me the whole trade plan. It's like giving someone the blueprint as they're building a house. I want you guys to build this fortress for your trading. Hence, I give you the blueprint way in advance. So one of the things that we will be doing, because a lot of folks just want to keep a sort of tally on what I do and don't have, at the end of each day in Sector Secrets, I'm going to go ahead and send out an alert to let you guys know what trades were filled that day, what targets were hit, and what trades were closed. But of course, you already know what those are going to be throughout the day because those levels are part of your original alert. So that's where I really want to change the paradigm of, I think, some of the habits that traders have, which is if they're learning from a trader, they want to know when they did something. I'm going to let you know before I do something. And I think that's going to be the foundation of your education being a lot stronger than a game of follow the leader, right? So I hope that makes sense. And so the simple answer is we will after the fact, but you already know where I'm going to exit because it's a T1. Now, how do we exit? Let me make this beneficial for everybody. We exit by scaling out of 50% of our position. And then here's a really important part, gang. We move our stops to break even. Now, last Friday, if you're part of Sector Secrets Mastery, I went through the whole process of not only price-based alerts, but also value of your option-based alert, because I don't want you having to stare at this stuff all day unless you want to. You want to, again, also be alerted when the price, the value of your option has dropped below a certain threshold. And you can set those types of alerts as well. So you're not monitoring the market constantly. You're sort of, again, the architect of the trade. And then your trading platform is making you aware of these key levels. And that way you can get about your life. But then when you need to be aware of something between 9:30 and 4, your platform's on it. And that, to me, is the best way to do it. That's the way I do it. That's the way I was taught to do it. That's the way I teach you guys to do it. All right. And let's see here. I'm trying to think if there's anything else. Oh, the common question is, Rog, what if I only have one contract? Take the one contract. The Steve Miller Band theory of taking profit, take the money and run. If you have one contract, Steve Miller Band, gang. All right. Let's see. Oh, it's already 22 after. All right. Let me wrap it up here because I know a lot of you are going to head on over to the respective rooms. So I don't want to keep you guys from that. But let's see if there is anything that I missed here. Soybeans, I'm just gonna take the soybean question because we don't get to talk about futures very often, and this has been a really good position for us as a swing trade in the futures room. And again, I alert the futures setups in the same way. We talk about these in the premium video, these swing trades in commodities, copper, beans, corn, British pound, taking advantage of these overnight trends, either via options on the futures or different alternatives. Yeah, I love this one. I'm actually looking at soybeans and live cattle again. Those were two of the markets we talked about specifically in the premium video, soybeans and live cattle. So Donald, thank you for the question. Thank you for bringing up some commodities. They are near and dear to my heart. Enjoy the rest of your day. Be aware of the volatility. I don't believe in any way that the current mood of the market is going to turn into this big downtrend. It could. If you haven't checked it out at the Simpler Trading YouTube channel, I did a in-depth discussion on the way that we can look at different sectors within the broader averages to really determine whether or not the flow is coming out of risk appetite, high beta, high momentum sectors and into more of those defensives. You can track that, and that's going to be your sort of inside track to understanding whether the kind of movement we're seeing this week is really a prelude to lower lows. I don't believe they are. Copper, which is one of our long trades via not only our swing trade in the futures room, but also FCX, Freeport McMoran, and Sector Secrets, is in fuego. This is not what risk appetite or a reversal of risk appetite looks like. This is what buy stonks looks like. All right, gang. So with that being said, I got my Diamond Hands t-shirt on today. Have a great Friday. I'll see you on Monday. Be good to each other, gang. Thanks as always for joining us here. Thanks for being part of the Charts and Coffee crew.